But finally, we're going to switch gears one more time, make waves in the marijuana business. Cannabis stocks surged last week after the Drug Enforcement Agency agreed to review its classification of marijuana and consider reclassifying it as a Schedule III drug instead of a high-risk Schedule I drug. So that would put cannabis in the same category as testosterone and ketamine, rather than in the same group as heroin and LSD, where it is now. The move is sparking optimism among cannabis ETF bulls, and it could clear a path for broader medicinal approval and fewer regulatory hurdles for funds that hold U.S. multi-state cannabis operators. Certainly a lot of regulation issues still exist. Christian, you have the Amplify Seymour Cannabis ETF, CNBS. That's run by our own contributor, Tim Seymour. And you also now own the ETF MG Alternative Harvest ETF MJ, which you recently just acquired from the ETF Managers Group. So what kind of impact do you expect for cannabis businesses and the ETFs that own them if some of these, or if marijuana rather, is reclassified?
Yeah, so this is big, Courtney. I mean, we've seen most cannabis ETFs rally over 30% since the news broke last week on this recommendation. And here's the key. If you become a Schedule III substance and you have a business there, you can now write off your business expenses where you couldn't before if you're a Schedule I or a Schedule II. So that really increases the cash flow and profitability of cannabis companies immediately here in the U.S. Secondly, that also means that it's more likely that the Safe Banking Act could be passed in Congress, which would give cannabis companies the ability to bank and participate in capital formation activities that are more like traditional companies, which that's huge news as well if that kind of comes as the second kind of fall-on event. And then finally, as Tim Seymour would say, this is a consumer packaged goods story ultimately, that cannabis can disrupt health, wellness, the traditional alcohol industry, even pharmaceuticals. And consumer packaged goods and pharmaceutical companies are going to be able to now look at these cannabis companies as M&A targets, to partner with them, et cetera. So we think the best is yet to come in this story. This is just an initial rally on the news, and we think that there could be a lot more upside in the future for this very disruptive industry that's based on a plant.
Yeah, it's wild what's going on for sure, and I think the banking aspect is really, really key, very important, knowing that many of those businesses are not able to bank because of the current regulations. I mean, Tom, weigh in here. Do you think this will spark a wave of interest in cannabis ETFs, leading them to become more popular, or do you think, too, it's a consumer packaged good and maybe it'll be part of the healthcare sector?
Well, the great thing about the ETF industry is there's a lot of opportunity, and we're going to have our ears to the ground, see if there are additional cannabis filings. ETF filings, and we're looking at Edgar all the time. However, that being said, as Christian and the folks at Amplify know, there's a great first mover advantage. And there are two options that they embrace and they offer, and they've had them for a while. I think we're going to continue to see more assets flow into that space as it's more widely accepted. We were talking off camera earlier, the whole idea about federal regulation being less in the cannabis space. It was something that was going to be happening over time, and now it's here. I think that's going to be very good for that industry, but it's going to be also very good for the ETF industry as there's more choice.